Welcome to today's market review. This is Fred Razak at CMTrading. Today's October 24th, 2018. And today is Wednesday morning. So looking at the major economic events of the day, just one major number coming out, and that's going to be at 4 o'clock South African time out of Canada. Bank of Canada has a rate statement and monetary policy report. We've been anticipating this earlier this week, and this is an important number for Canada, okay, especially because we've seen a little bit of volatility near its 131-ish level. We'll take a look at that in just a moment. But just a few points before we do our work on the charts. Number one, we're officially in, at least for now, what looks like a bear market, okay? And we're going to discuss what the signs are. The euro is capitulating in the 114-ish area. GBP is lower. Oil down further on Saudi Arabia's vows to up production. We'll take a look at that. $66 a barrel, down significantly just overnight of $3 a barrel. Gold breaks out from its bull flag on the upside. We discussed this earlier this week, which was a nice little play. And then Dow has a V formation day. We're going to take a look at that and see what that means. Tesla rallies and the market is flat. So some mixed signals there, but let's take a look at the markets and see what's been happening. Okay, what we're looking at is a 1 hour chart on the Euro USD. And as you can see, we've had this really volatile sideways movement, okay, from yesterday's trading session. And basically this is really indicative of a very capitulating market, which means that after a significant fall, which we had here, okay, the market kind of consolidates, but it consolidates with some volatility and some extreme moves on the upside and then on the downside, and that's very indicative of a bearish market. Okay, so we're at the end of this market. Okay, yes, we've gone down how much? 1,000 pips since our 125-ish level. We look at a daily chart from 123, 24-ish level. We've gone down almost 1,000 pips. So altogether, this is not new news to us, but this does mean that if we do break further down, that it could be more permanent than it is right now. Okay, it's just like when we dip down here, that's just dipping. Okay, but if we do sell off on significant level on the downside here, that looks like it's more permanent, at least for a 6 months to a year basis. So just be aware of that. GBP USD also lower, looking like it's making this double bottom here. Okay, we're just a little bit higher here, but still selling off. But we're at the bottom of that range, and the Aussie dollar looks like it's rallying. Okay, we'll look at that in a second. There we go. You see that it rallied this morning. So, we may anticipate the euro and the GBP to catch up to the Aussie dollar. Now, it looks like the USD Swiss franc is tapering off at this 99.52-ish level, so just be aware of that. Might be a decent sell-off right there. Okay, now looking at the commodities, we're going to jump into the gold. This was our bull flag yesterday that we mentioned. Okay, there's the flag. Okay, and there's the breakout. And sure enough, that's exactly what happened. We broke up from 12.22 up to 12.38-ish level. We're trading right now at 12.31. Okay, just be aware the next resistance level is really at 12.40-ish level. Okay, that's our really next resistance level where we've had previous support. So, on a wick formation, we actually hit that yesterday. Just bear that. Okay, so 12.40 down to 12.31. Now, what is happening with oil? Oil is selling off quite sharply, down from 77 high of the year down to 66.43, and they're trying to depress the price of oil so that inflation is in check. Okay, they don't want inflation to get too high, and thereby causing a panic in the financial markets and selling off the indices. So, we're at this bottom of this range. Can we go lower? Yes. Okay, but I think we're going to bounce off of these levels. I think we're going to trade sideways for a while. Okay, but we are at the bottom of this range. Okay, so just be aware of that. If you are short, you might want to get out of it, but I wouldn't chase this down. Looking at the Dow Jones. Now, this is what I'm talking about, a V formation. If we look at that yesterday, okay, we opened up minus 300 points. Okay, we were already minus 300 points, just about this area we opened up. We sold off sharply, okay, down to the 24,775, and then we rallied right up. Okay, now this is so indicative of a bear market. Okay, it's where the market just looks really bad and they sell it off, and then they're short covering all of a sudden. Okay, so this is a support level, 24,000, 25,000-ish level, 25,900-ish level, 25,000. Okay, so this is really important that it's sold off, but still maintain itself above 25,247 is where we're trading right now. So, if we don't rally today, we may see still in a correction on the downside, okay? But just, the volatility is really there and the markets are really selling off, so there's no surprises here, okay? Look at that, all right? That's a major retracement. Looking at a daily, okay, we sold off all the way down to the 24,700ish level, okay, from 25,100ish level. So it was a 400-point move on the downside, but we corrected ourselves and we're trading here at 25,243. So, my guess is that we're going to hold this, support line and maybe correct ourselves maybe a little bit on the upside, okay, but this is definitely the bounce after this massive, sell-off. So, if we make a double bottom, at least for now, and kind of, rally here, it's not going to be much of a surprise. So just be aware of that. Now the banks are soft, okay? They are selling off. So, for the Dow Jones to sell off is very natural. Now, like jumping into the NASDAQ, NASDAQ rallied a little bit yesterday, but nothing to really write home about. Okay, I would have liked to see, some sort of correction on the upside, but it didn't. Apple jumped to 222. That seems to be our number. Okay, if we don't break out higher, this does look like it's forming a, minor support area at this 222-ish area. Now, jumping into Tesla, Tesla was the one that really jumped yesterday. Let's just bring it up. There we go. All right, every time it hit this 250-ish level, it bounces right off of it. All right, look at that. So 252 and then, 293 in the day. That's a 40-point move in one day. That's, very extreme. Look at how sharp that is. Not to say that we may not continue selling off, and that's the point of this bearish market, is that you get these spikes and you think that, okay, the market's gonna, rally right back and everything's gonna be okay, and then you get this massive sell-off or this tapering off and so on and so forth. So just be aware that we are looking like we're in a bearish kind of mood, okay? Not to say that we're going to go back down to 19,000 in the Dow Jones, but but at least for the short term, until otherwise, we consolidate something or we rally on the top side, we look like we're breaking down. I'm looking at Facebook dead, okay, 153 and not bouncing. All right, so this is part of, the question is that are we going to continue breaking out further down? So that's, you're going to have to look for some confirmations from the stocks and see what's going to happen there. Now, I haven't discussed Bitcoin or the other cryptocurrencies just because they're not trading. Okay, the volume is low. They haven't done anything. If you look at Bitcoin right now, it looks like it's a flat line. Okay, and can't really trade that. All right, that's not tradable. All right, so if you are trading it, get out. Okay, there are other things to trade right now, especially in the equity markets and the stocks and commodities. A lot happening there. So just be aware that most of the cryptocurrencies are pretty much looking like after the debacle, after the hype, until some resurgence of it. And I think that the market is very shy of it because they're very skeptical of what happened from last year, going from 15,000 down to 7,000. Okay, so just be aware of that. This is really indicative also of a post market. Okay, it looks something like this. Like, let's look at a daily chart. This is so reminiscent of the internet stocks of the year 2000. After the boom, there was the bust. Okay, and then it flatlined for a few years, and then we had some activity following it. So just be aware of that, and it might not come back for a little while, but before I profess that, for now there's not much going on. Okay, this is Fred Razak. I want to wish you guys a great trading day. Thank you.